All right, today we're going to break down a really fascinating forecast for gold and silver from market strategist Gareth Soloway. He spotted some key chart patterns that, they suggest a pretty surprising path for precious metals. So let's just dive right into his analysis.
So right off the bat, here's the central puzzle. With everything going on in the world, you've got instability, rising oil prices, crazy inflation, you would absolutely expect gold and silver to be skyrocketing. They're the classic safe havens, right? But they're not. And that contradiction, that's really the key to understanding this entire thing.
And this quote from Gareth Soloway, it just cuts right to the heart of it. The whole argument is that when an asset should be going up because of all the good news, but it isn't moving, well, that's a huge signal that the underlying momentum is actually bearish, that it's pointing downwards.
So first up, let's talk about gold. According to this analysis, the charts are painting a very clear picture. And really, it all comes down to a classic technical pattern.
The key pattern we're talking about here is called a bear flag. And honestly, it's pretty simple when you break it down. You get this sharp drop in price, think of that as the pole, and it's followed by this brief little upward drift or sideways chop. That's the flag. Technical analysts look at this and see a pause right before the next major leg down.
Now, here's what makes this analysis so compelling. It's not just one of these bear flags on gold's chart. There are two of them, and they're operating on different timelines. You've got this small micro pattern that's signaling some immediate weakness, and then there's a much larger macro pattern that suggests a more significant drop is coming down the road. When you see patterns confirming each other like this, analysts take that as a much, much stronger signal.
Okay, so this slide lays out the whole predicted path. First up, that micro flag is pointing to a short-term drop, probably in the next week or two, down to what's called a support level around 48.60 per ounce. Then, after that, the bigger macro flag suggests a larger move down to the $4,300 to $4,400 range, and that could happen within 1 to 3 months. So, the key takeaway here is that this is a multi-stage forecast.
All right, now let's pivot over to silver. The story is similar, but the analysis suggests silver's position is actually even more vulnerable than gold's. The chart is just showing signs of much greater weakness.
So, how can we see that weakness? Well, it's all in the shape of that flag pattern we talked about. After its initial drop, gold managed a really strong bounce. It recovered all the way back to its prior highs. Silver, on the other hand, had a much weaker, much flatter bounce. It just couldn't rally with the same kind of strength, and that tells analysts that the buying pressure just isn't there.
This leads to a really fascinating long-term forecast, and it uses a classic market term you might have heard, a retrace to the scene of the crime. This happens when an asset has a huge breakout to a new price level, but eventually it circles all the way back down to test that original breakout point. It's kind of like the price has to go back and touch its old ceiling, which should now be its new floor, before it can really move higher with confidence.
And here are the specific levels for silver. The short-term pattern points to a retest of the recent lows. The midterm move is targeting the $54 an ounce area. But that ultimate long-term target, that scene of the crime, is all the way down in the $49 to $50 range, which is a massively important historical level from way back in 1980 and again in 2011.
Now, I know this all might sound very bearish, but every predicted drop can also present an opportunity. This next part is all about identifying those key levels where a patient, long-term investor might see a prime moment to buy.
For gold, that major long-term buy level is identified as the $3,500 an ounce area. According to this analysis, this is the price point where you'd likely see serious long-term buyers step in and accumulate big positions, or as they say, load the boat, getting ready for the next major cycle upwards.
And for silver, that key opportunity is the retest of that $50 level. So that scene of the crime price point isn't being framed as a disaster, but more as a huge long-term buying opportunity for investors who are looking for a strategic entry. And this is a really, really important clarification. The analyst is not bearish on precious metals forever. This entire forecast is just for the near to midterm. The long-term conviction is still strong that gold and silver are essential insurance policies against the steady devaluation of our fiat currencies.
So what's the big takeaway from all of this? Honestly, it's less about the specific prices and more about the mindset. It's about having a strategy that can overcome that fear of missing out, FOMO.
I love this quote from the analysis. It perfectly contrasts two types of people in the market. You have those who chase prices out of FOMO, and then you have the smart buyers who patiently wait for the odds to be stacked in their favor at these predetermined high probability levels.
So it all boils down to this: discipline over emotion. Instead of chasing a fast profit and getting caught up in all the hype, the suggested strategy here is to use analysis to find the best possible entry points and then have the patience to wait for the market to come to you.
And that really leaves us with a final thought to chew on. After all the detailed charts and all the price targets, the entire analysis really boils down to this one powerful idea. It just makes you ask, in a world of constant noise and crazy volatility, is the most powerful tool an investor can have simply patience? Thanks for joining this breakdown.